Okay. Nick, thank you for having me here in Zimbabwe at your house.
It's a pleasure.
Nick De Swardt from CICADA. So how I came about without, before even Linda telling me, is all of a sudden CICADA just exploded on my LinkedIn. I'm seeing videos and photos and newsletters and posts, and which is brilliant. I love LinkedIn. We do all our stuff on there. So, and it was good to see. And then when the call came for me to come to Zimbabwe, it was said we're going to visit quite a few of your places. So thank you for having us.
That's a pleasure. Yeah.
So please tell me about you and.
Okay. I mean, it's a long story.
Yeah.
So I grew up in Zimbabwe. Went to university in Edinburgh to study mathematics, with no real idea of what that would mean for my career. But my grandfather was a farmer in Zimbabwe and was sort of very instrumental in setting up a lot of the institutions, the agricultural institutions in the country. So when I came back from university, I went farming with him. But that was around 2000, so in the height of land reform.
Yeah.
And we 3 years into that farming stint, we lost the farm. And
when was that? In the early 2000s?
That was 2003. Yeah.
Okay.
And so I was, a young man with a farming background and a mathematics degree. I didn't really know what to do with myself. Okay. So I landed up going to Cape Town to study financial maths. And again, I didn't really know what that meant, but it had finance in the title, so I thought that was going to lead to a job. I was right. I landed up going back to the UK. I was in London for 9 years, working in finance as a quantitative analyst, actually. So like a massive swing away from farming. And then we had 2 kids in London, and that changed things a lot for us, because London as a 20-year-old with no kids is great, and as a 30-year-old with 2 kids is much less great. So we decided we wanted to come back to Zimbabwe, and sort of completely coincidentally at the time, my brother-in-law had started working for a company called Rift Valley, which was a regional agricultural business. So they had interests in Mozambique and Tanzania and Zambia at one point. And he was talking to the chairman, and the chairman said, hey, we're really looking for someone who's got a strong finance background, but also Zimbabwean, and also someone who's done some farming.
Sounds like the job was made for you.
I was like, I think I'm probably one of the only people with that CV. So I applied for the job, got the job, and came back to Zim in 2014.
Okay. What age were you at that stage?
32.
Okay.
Yeah, 33. Started working for Rift Valley as the head of business planning, which was all about financial forecasting of the different businesses and just understanding how capital should be allocated in a quite large, complicated group.
So how was that, from moving from that London finance coming back to your roots?
It was brilliant.
How was that transition? Was it? Did you think this is like a holiday, or was it like go?
It was really hard work, actually, because at the time I moved back, Rift Valley was going through a process of trying to raise a significant amount of capital. And my job straight off the boat basically was to model about 20 different businesses.
Wow. Okay.
And come up with proper, detailed, financial forecasts for all of them. So when we arrived back, my wife was a bit nonplussed about how many hours I was working. She thought, we're meant to come back to Zim for the good life, and this you're working even harder than you were in London. But that was 6 months, or maybe not even 6 months of my time. And in that process, I got a really detailed understanding of all the businesses in the group, which was really interesting, and also, great for my career in the group, because it just meant that I knew
You knew how it
apart
worked.
from like the top management, I knew more about the whole group than anyone else. There were, everyone knew more about their specific
Yes.
silos, but how the whole thing fitted together was something that was really in my head, and really interesting also to just understand all the different levels of uncertainty and opportunity in a group like that. So that was fantastic. Rift Valley then went through a consolidation process. It had grown very quickly in its early years. It was like 2010, around there, and it acquired a lot of assets. And it had the guiding philosophy behind Rift Valley's investment was to invest in land and water assets that were underpriced. And there were a lot of those assets in Africa. But I think it probably turned out that they weren't underpriced. The risk was properly priced. So a lot of those assets that were acquired in those early days have been disposed of over the decade. And I think the last non-Zimbabwean asset has just been sold.
Okay.
So now the Rift Valley became an entirely Zimbabwean-focused business. And I think that's also interesting because in the international media, Zimbabwe is often portrayed as a
I'm coming to
very
that.
difficult place for agriculture. And in our experience, it's actually was by far the best place
Okay.
in the countries that we were operating in.
Were you operating in South Africa at all?
No.
Okay.
No. So it was like I said, Tanzania, Mozambique, Zimbabwe. They had a Zambian operation at one point, and I think they had a Sudanese operation before I joined.
Okay.
So they disposed of a lot of those assets, became a very Zimbabwe-focused business. But I think also there was a big change in mindset in that time frame. So if I go back over the last decade, the first 5 years of that decade was this process of consolidation and focusing on core businesses and the businesses that really worked, where we had the management teams and the right, natural capital. But the lens we saw everything through was still through a financial lens, and I think this is something that's quite difficult from a sustainability perspective.
Sustainability meaning is company sustainability, or like what everybody knows is sustainability now?
Well, I think they're actually quite similar things.
Yeah.
Okay, so let me explain like this: if you're an individual and you own a farm, you will make decisions about that farm that are not just to do with money.
Yes.
You will make decisions based on how you feel about the environment around you, how you feel about the people around you, what is fun, right?
Yes.
For you.
Yeah, because it must be nice.
It must be, it's a lifestyle. And as soon as you try and do that same job through a corporate perspective, those kind of decisions become very hard to make.
Yes.
Not because people don't want to make them, but because they're hard to articulate. And they're hard to explain to shareholders who don't maybe live on the farm why you think planting a tree or setting up a small-scale farming scheme might be a good idea. They're not necessarily financially attractive. They have other attributes that make them interesting, but they're not financially attractive. So during that first 5 years of this decade, everyone, I think, from the chairman of the board, down to the management team, all had these thoughts that somehow we're viewing this through the wrong lens. And then 5 years ago, we spun out CICADA from the Rift Valley Group. So we took all the agroforestry businesses into CICADA. And the chairman instigated a sustainability review. And I mean, sustainability is a catch-all term now. It's almost become meaningless because people use it.
It's like the flavor of the month kind of word.
But I would say 5 years ago that he was a little bit ahead of his time.
Yes.
And he was saying, from a financial perspective, this stuff is going to be really important.
Okay.
So whilst we all know that it's important, but we've been struggling to articulate it, or struggling to motivate decisions around things that are not purely financial. We know that's important, and we need to get our heads around it, because it will actually become financially important. And he was completely right. But so at the sort of birth of CICADA, that was the change in mindset that came about. And we've been working for 5 years now to try and make decisions that aren't purely financial. So, for example, we established the My Trees Trust, which is a Indigenous reforestation program, hugely successful, but not financially.
It's costing you money.
It's a CSR program at the moment, right? But it's a good program, and it's one that we're all very proud of. So there was that, the small scale farming scheme that we're setting up in the Hondi Valley now, just looking after the environmental parts of our land assets that aren't commercial, has become very important to us. And again, doesn't make you any money. So we've been working at all of this stuff and trying to put together a group strategy that in its first instance was called the sustainability strategy, but we soon realized that actually it can't be separated from the group strategy. They're the same thing. So that's where we landed up here today, with a portfolio of really interesting financial assets or assets that have a commercial purpose, but also about half of our land assets in the group are non-commercial. They're they're wetlands, or they're mountains, or high-value conservation areas that are not commercial. And we've been able to, from the shareholders, the board, management, all get our heads around the fact that we can make the right decisions about those things without having to come back to looking at everything through a financial lens.
Because that's fantastic, because there are few farmers in South Africa, because we deal with a whole lot of them, that has adapted that kind of strategy even before this whole sustainability, regenerative agricultural thing became a buzzword. And you can see that they are definitely reaping the benefits now. It's just because that's the way that they farmed. They decided they need to look after the environment.
Yeah, but it's not just the environment. It's
the people.
So we think about our 4 capital stocks really, which is our financial capital, and that's vital, because if you don't have any money, or you're not making any money, your business won't exist, and then you won't be able to look after any other capital stocks because you won't be there. But then you've got your social capital, which is your neighboring communities, your human capital, which is the people you employ, and your natural capital. And I think in a farming business, you don't have a factory or a machine.
Yeah, it's a factory without the roof.
The thing that makes your product is nature, right?
Yeah.
It's like these very complicated, dynamic, natural processes all working together in an ecosystem that you are managing to produce your avocados or your macadamia nuts or bananas, whatever it is. And so the natural capital is a hugely important asset for us from a financial perspective. And that's also a shift in mindset that's happened in the last 10 years in the group.
So I think one of the burning questions that anybody will have is farming in Zimbabwe. All of these things, they all work together. But when I said to people now before I came up, I'm going to Zimbabwe, what are you going to go do there? And I said, well, the bit that I've seen was incredible. It was incredible people. They work hard. Yes, they've got challenges. We've got challenges in South Africa as well. California's got challenges. Everybody's got challenges. So is Zimbabwe open for more of that? Could people from South Africa come and build businesses here, or anybody from anywhere else in the world get into the agricultural industry?
Well, I think Zimbabwe has a fairly unique set of challenges, which may be difficult for people who haven't been in Zimbabwe to navigate. land is a huge, complex issue in this country, as it is in South Africa. Going back 100, 200 years, there's a lot of history that is very present actually today. And we've had a land reform program in this country. You haven't yet had the same thing in South Africa,
No.
but it's not unlikely that it could happen. And whilst that program, did a lot to rebalance the land ownership structure in Zimbabwe, it also left a legacy of destruction of capacity. So a lot of agricultural production dropped off in the early 2000s, and it's now picking up. But it's been a 20-year process to kind of put that back together. And land ownership itself remains very complicated in Zimbabwe. Well, you can't, as a private individual, you can't own land. You can't own rural land. You can get an offer letter from the government, but that offer letter can be revoked
at any time.
So it's very hard to have a long-term view of land stewardship in Zimbabwe. We do, and I think Zimbabweans who've been here through that 20-year process are able to get their heads around the fact that this is now a stable situation. And although the letter doesn't, it's hard to borrow money from a bank against the offer letter that you have.
Yes.
Zimbabweans are pretty ingenious, and they've worked out how to manage that process. And a whole lot of new financial type institutions have sprung up to provide that finance because the traditional banking sector can't. So, for example, there's a huge contract farming tobacco model in Zim. Finances a lot of both commercial and small scale tobacco production on a seasonal basis, secured on the crop. But that's not the banks doing it. That's another entity, another private sector entity filling that gap. So I think it's very hard for external investors to get their heads around the lack of security of tenure.
Yes.
And I think this is something that the government has been talking about for a while now, is how to provide that bankable instrument. But it's very complicated because, I think there's obviously a risk that if they just provided a bankable instrument, the result would just be a slew of foreign investment.
Yes.
Undoing the land reform program, because everyone would just sell their land for money, and you'd land up with, international companies owning the majority of the land again, right? So I think that's a difficult bridge to cross. And then the other big challenge that external investors have is the currency. I don't know how many currencies we've had in the last few years.
It was quite,
but it's more than a few.
No, on this trip, it's been quite eye-opening because it's US dollar that trades at this point about 19 rand to the dollar.
Yep.
But yet here it's more like a 10-to-1 kind of ratio. That's the feeling I get if you look at
prices. Yeah.
Yes, of what things cost.
Yeah. So it's very difficult for people in the retail business to price anything effectively because periodically we'll have a new monetary policy that will try and reset things, and we've just had one now with the introduction of this new currency, the ZiG, which is backed by gold and foreign currency reserves. But unfortunately, after 15 years of the currency being very unstable, people just don't really trust it.
Yes. So
that just leads to that lack of trust leads to speculation. It leads to people just assuming that inflation is going to happen, and when people assume inflation happens, it happens, right? Because it's the people who drive it, right? So then you get the separation between what the exchange rate should be and what it actually is, and then when you're a retailer trying to price your product, you've got to price some forward inflation into it. You've also got delays in payments because everyone's scratching around for money, so you have to build another month or 2 months into your payment cycle, and you don't know if inflation could be no
depends.
percent or 50% in that time. So that's a huge challenge. And again, Zimbabwean businesses have broadly got comfortable with how to navigate that. But I think as an external investor, it's very challenging.
Yeah.
So I think those are in reality the two main obstacles for external investors. But we are seeing, as a company, a much increased interest from DFIs, from multilateral banking and financial institutions to come and support companies that have a stable balance sheet or strong balance sheet and can deliver things and have the right mindset. So I think that tide is turning. For us, slightly selfishly, it's a big competitive advantage.
Yes.
To be comfortable with those two risks and be able to invest. I mean, we've invested tens of millions of dollars in the last 5 years in this country because we're comfortable and we feel like we know what we're doing. We might be misguided, but we do feel like we know what we're about here. But every time we get a foreign investor coming in and you start trying to explain to them how a Nostro account works, for example, you see them glaze over and then eventually they head for the door. So for now, we still feel like we have that competitive advantage.
And anybody else coming in are 5 years behind you.
Yeah, and like I said, I think it is difficult to find the right counterparties in Zimbabwe who have that mix of a balance sheet, the right kind of governance structures. We have our majority shareholder is Norwegian family, and we have world-class governance structures in our business. We have to. There's no choice, right?
Exactly.
So it's hard to find that combination of land assets, governance, financial capital, and the right kind of stewardship mentality. But I think we have got into that place now, and we are actually in the process now of attracting some external investment. I mean, at the moment it's really debt, not equity at this stage. But we are hoping in the next 2 years to take the company through an equity raise.
Fantastic.
Yeah.
On
That'll be exciting.
on that, slightly on the same topic, South Africa is seeing a bit of I wouldn't say an exodus of farmers going to the States to go do H2A work. They go drive tractors and harvesters, and they go and I would say they come back with a bit of money in their pocket. Is there opportunity in Zimbabwe with a company like CICADA for work for some of the South African farmers to come and work for a company like yours and build it up? And also youngsters, because there's a lot of
so we have
youngsters.
Our focus is on building this local skill sets, right? So we do have internship programs. We take school leavers, we take interns, we take graduate trainees across the business, and our goal is really to foster those skills locally. So we don't really want to foster skills in another country,
especially if they're going to go back.
Right? So, but where I think it is interesting is there are a lot of skills gaps in Zimbabwe at the moment, in the forestry sector, for example. A lot of the skilled forestry people who knew their silviculture or sawmilling have left, and it would be really interesting to bring in highly skilled people for not 10 years, maybe 5 years, to transfer those skills and teach the local workforce, re-educate the local workforce on those skill sets. And those generally are quite technical things. But it's not driving tractors or operating machinery or haulage or those kind of things is not that space. But I think if it was okay, we have a sawmilling operation in Chimanimani, and if we wanted to start doing hardwood sawmilling, we've got a lot of overgrown eucalyptus trees there. That
I saw that.
yes, so they're not commercial trees at the moment. They're too big for poles. They've become overgrown. We need to convert that land back into a commercial.
But yet they will make good.
But they'd make a great saw log, right? But we don't have the skill set to saw that and dry it. Drying is actually the major issue with eucalyptus. So getting someone from South Africa, say, or from Australia, who was an expert in that field, and could come and teach our team like how to do it, would be obviously very interesting for us.
Right.
But it's about that, rebuilding the skills in Zim.
But if you, I can just see it. If you've got a South African coming here for 5 years, he's not going to want to leave.
Well, that's also fine. If the skills, I think that if the skills stay in the country, then that's great, right? That's great for the country.
But a lot of these guys going to the States to go work on these big wheat and grain farms, they're fantastic farmers, but they go there and they become, they are like the help on the farm. They are the tractor drivers, the lorry drivers.
They do all of it, yeah.
Yet there might be brilliant farmers that could run a fantastic operation. They just had everything against them in South Africa. They couldn't commercially make it or something like that. And for South African big commercial farmers saying that CICADA would like to take hands and help establish a new unit in something in Zimbabwe?
Absolutely. So, like I said, we're looking to do an equity raise in the coming few years. And whether that's a South African agricultural business or family or whoever it might be, we are looking to grow our business. We have still within our portfolio, we've got 2,000 hectares of potentially arable land.
Yeah.
That used to be arable land 20 years ago and isn't anymore, or used to be forestry land and isn't because of fires and cyclones. And
Yes.
I think so. There's a lot of in our I said we got about half of our land holdings are potentially commercial. Within that half, there's about 2,000 hectares of development that can be done, and that's massive. If you did 2,000 hectares of avocados, that's a huge huge investment. But there's also, we at the moment are really in primary production. We grow fruit, we make rough sawn timber.
Yeah.
And as a primary producer, you really on the back foot when it comes to commodity cycles. You have to be the lowest cost producer, produce the highest volume per unit land,
and quality.
And you have to produce the acceptable quality. In the commodity market, you don't get paid for producing extra quality, right? You get paid for producing quality within certain bands.
Yes.
So we need to move up and down the value chain a little bit. So whether it's into inputs or services, or into manufacturing or remanufacturing timber, or producing avocado oil, or cracking macadamia nuts, or producing macadamia milk, whatever it is, we see the growth of this company both in terms of producing more from the land assets we have and from value adding that product.
So, you want to grow more in the value added of the product that you produce.
Yeah, and there's a risk of losing focus. We already have 4 main product lines. We've added a solar business recently. So that was the service provider really to our businesses in the first conception of that. But now that's become a business in its own right. We've added a carbon business. So the carbon business was really... I was
going to ask about that next.
That we see that as a way of financing the scaling up of our CSR program. So we've got
because that's still a concept that I don't think many people understand. Is the whole carbon and carbon credits and all those kind of things. Because there are some people talking about it, and it's a slight whisper in South Africa that I can hear, but I don't I'm not aware of any big commercial farmers that has really looked at that.
It's a new space, and it's been through a lot of volatility in the last 2 years. So 2 years ago, after COP27, I think it was, or COP26, there was a huge surge in demand. Everyone thought carbon credits were going to be the thing that funded our global emissions reduction plan. And then there were a few big scandals. A lot of the media turned against the concept. The price crashed last year. The Zim government started legislating the space, which was both helpful and challenging.
Okay.
So helpful in the way that now there's a clear legal framework to operate in,
Okay.
And that is very much needed in the carbon space. But challenging in that the perception, following from COP26 and 27, was that carbon credits is like this bonanza of money, and money just sort of comes out of the sky, and that's sort of what was happening. That was the reality. I mean, some of the projects were, they just draw a line on a map, register a project in Switzerland, and then start getting money. They don't have to spend.
But who gives that money? Who is the people giving the money?
It's big corporates who are buying emission reduction certificates.
Yeah.
So that's like a certified unit of carbon that hasn't gone into the atmosphere or has been taken out of the atmosphere.
Yeah.
And they need that for their net zero targets. So a lot of big corporates have targets to reach net zero emissions, a zero carbon footprint.
Okay. So they're saying that the profits that they make,
they're going to use some of those profits to offset their emissions.
okay,
And in a way, you've got to think about this as a wealth transfer. So wealth transfer from the industrialized nations, or from the companies operating in the industrialized nations, to the natural capital in the global south. So, our way of thinking about this is the only way that we can raise the money that we need to deal with the environmental problems we have in the country at the moment. I mean, there might be other ways that emerge, but at the moment, carbon finance is the only functional way we can do that. But the reality is, if you do these projects properly, they take a lot of risk. You don't know where the market sentiment is going. Things change rapidly all the time. There's a lot of upfront investment normally if you do it properly, and so the levy that the government's charging, which is 30%, in many instances is too high to make it commercially investable.
Not
in every instance, but in many instances, it's not going to work for that project type.
So for every dollar you get as a carbon credit, there's a 30% tax, or something.
So it's a 30% revenue tax,
okay,
right? And I think in the world of 2019, 2020, 2021, that kind of made sense in a way, because the carbon credits were booming and everyone was printing money out of it, right? But in the world of today, it just doesn't make sense anymore. It doesn't work.
Okay.
So we're talking to the government about this all the time, and there's a climate bill coming through Parliament that we hope to have some pretty broad consultation on, and hopefully we can find a way that everyone can get what they need out of this. Because what the government needs is, it needs emission reductions for its Paris Accord obligations. So we've made certain commitments as a country to reduce emissions, and the voluntary carbon market is one way to get the funding to do that.
Yeah.
But the government needs the right kind of carbon projects to come in, and maybe to incentivize the right kind of projects to come in, it needs to relook at that levy. And there's another thing that they can do to make it really all add up, which is to issue what's called a corresponding adjustment to the carbon programs, or to some of the credits. And what that is a commitment not to double count those credits against their national inventory. So if someone buys them, the government's saying, that's gone to you, we're not going to count it here. So when we add up, when we do our stock take for the Paris Accord, we're not going to include those emission reductions. The problem with that, it makes it commercially viable for the project because you get a much higher price. But then the country doesn't get to count the emission reductions. So from a from a Paris impact perspective,
Yeah.
it doesn't. You've given away what you wanted to happen, right?
Exactly.
So it's very complicated. I think we're working very well with the government on trying to work out like how
I would
to
say
do
you
this.
needed a green maths to do that kind of thing.
Well, yeah. I mean, it's the carbon world is a very complicated one, and it's made more complicated by the fact that a lot of these global agreements have not quite been reached yet. So people are talking about things, you see things moving in a certain direction, but it hasn't actually been agreed yet. So how the Paris Accord is going to work with regard to carbon is still up in the air.
Yeah.
And so it's very difficult for the government to say, okay, we're going to do this, and then find out at the next, COP29, that the global policy goes in a different direction. So it's a tricky space. But I think it feels to me like there's been a change in sentiment. There's been a big push around integrity in these markets, which means that programs that aren't doing the investment and aren't actually having the impact that they claim to have are, getting found out. So that's good. There's also some movement on some of the big markets that buy credits. So Corsair's won the airline industry.
Yes, obviously. Yeah.
And so that, there's a huge demand from the airline industry, but how that works, how that mechanism works, hasn't quite been finalized yet, but it seems like it's coming in this year. So there's a lot of positive movements, and I think because Zim has this legal framework now, which is really useful, we have a big opportunity as a country to kind of get to the front of the queue if we can work out like how to get the right balance between levies, environmental impact, social impact, and investment incentives. That whole thing has to work together. So it's not easy.
It sounds
promising.
It sounds fascinating. So can a company like CICADA say, right, we're not going to sell for the next 2 years. We're not going to sell anything. We're going to build it up. Let's say in your forestations that you, your natural forests, you plant wetlands, things like that. Can you build up a pool so that you've got some for later on? Can you do that?
Yes.
I'm asking because I don't know.
Yeah. So I mean, there's lots of different carbon project types. The kind you're talking about is a sequestration kind of project where you might take a degraded area and reforest it.
Okay.
Now you can do either commercial, monoculture type plantations. Those are much harder to finance through a carbon mechanism because they should be financially viable on their own. So what you're really talking about is natural woodland restoration. And if you do that, if you register a project, those trees have to grow. And while they're growing, they're sequestering carbon. And then at some point in the next 5-10 years, you decide to go and measure how much carbon you've sequestered in your trees. And then the auditor will come and check. They'll do the diameter, breast height measurements of the trees, and they'll measure the heights and crown diameters and so on. And then they'll say, okay, this is how much carbon you've put in the ground because of your program, and they'll issue you credits against that you can then go and sell. So that's one kind of project. The other ones are avoidance projects where you basically change something, you change a dynamic that results in less carbon being emitted into the atmosphere.
Okay.
Much harder to verify because you're verifying against a counterfactual, like what would have happened if I didn't do this. But it's impossible to know exactly what would have happened. So you have to be very conservative in those kind of projects. But those are things like, for example, stove projects.
I've heard of that.
So we have a cook stove project. We give a household a cook stove. If they use that stove, we've done 14,000 odd surveys. The reduction in firewood consumption goes from about 6 tons a year in a normal household to about 2 tons a year. So a big reduction in firewood consumption. And we have to present that data to the auditor and say, here's 10,000 surveys of people who don't have a stove and 10,000 surveys of people who do have a stove, and this is the difference that you see.
Yeah.
And how many stoves have we distributed?
And also, are they using the stoves?
Are they using the stoves? Do they have more than one stove? Because sometimes they'll have stoves from 3 different, carbon projects. And do they use the stove in winter when they want a fire to be warm, or
Yeah.
So there's a lot of
variables.
A lot of variables. But our view is that kind of project is really simple to roll out, is really effective. It's not going to solve the rural energy problem, but it's an easy, low cost first step. You have to, if rural Zimbabweans are still cooking on firewood in 10 years' time, then we've all failed.
Yes.
Everyone, government, private sector, we need to get some kind of rural electrification happening in country, but it's hugely expensive. So in the meantime, whilst those pieces are kind of being lined up, you can do things like cook stoves, which take the pressure off your natural woodlands considerably. And
That's fascinating.
Yeah, so that sort of buys you 5 years to work out, like, okay, maybe we're going to go to LPG, or we're going to go to ethanol, or we're going to go to solar, whatever it is. But it just buys you a bit of time, and it's very low cost, and you can finance it through carbon. So, it's not just like a donation that you need; it's a commercial investment.
Sure. Wow. Okay, so I think we can start wrapping this up. Is there? Okay. Do you have a message for the world about Zimbabwe, or for anybody that happened to listen to this? We don't know. Might be 10 people, it might be 10,000. We don't know.
Okay. I think, Zimbabwe's in a really an amazing country. It is not overpopulated. It has huge natural resources. It's got large intact ecosystems, which are a rare thing in this world today. And it is full of opportunity, but it's also can be a complicated place to navigate. But what I'd say to people is, don't listen to everything you hear in the media, all the bad press you hear in the media about Zimbabwe. There's a lot of very positive things happening here. And companies like ours are in a great place to make things happen. And one of the things that I'm really excited about is this change in mindset that we've been able to foster as a company, to start looking at things holistically. And it's it's an amazing platform to have to actually go and affect change, positive change in the country. And it's something you can't really do as an individual farmer. You don't have the financial capacity to do that. So it's a fantastic place to do agriculture, and there's a lot of opportunity.
We've got a saying is that bad news spreads itself. Good news needs a bit of help, and we would love to help with a bit of that.
Yeah, that would be fantastic.
Yeah, Nick, I want to say thank you for your time on a Sunday morning. We're going to get out of here and let you enjoy the rest of the day.
Okay, thanks very much.
Thanks for the time. We really appreciate it. Right.